Hello, everyone. I hope you guys had a wonderful long weekend, enjoyed the break, relaxed, and let's get right into the analysis because we just printed a new monthly candle here for the month of September, and we'll just take a look at not just the SPY, but we'll take a look at the futures as well. And right now on the S&P 500, we could see that we are getting a little bit of a slowdown here on the monthly time frame, and it's starting to look like there's a possibility that this B wave might be starting to be putting in a top here, but we'll have to see if this plays out because there is also the bullish scenario where the weekly time frame is showing that we may make a new all-time high right around 510 to 508, maybe even as high as 600. But if this were the case, then I could imagine that the drop that would follow after this would be pretty dramatic, and I mean it would be really bad if this were the scenario to play out. But for the time being, my primary target is going to be this pattern right here, and that's just going to be an ABC correction. And again, we'll have to follow if this is going to play out. At the moment, everything's basically flat to negative on the futures. And taking a look at sorry, not just the SPY, I wanted to take a look at the Nasdaq on the monthly time frame. We actually got a pretty significant slowdown here on the dual band strength index. Taking a look at the previous month, we had a 5 and a 4, and that actually after we printed these numbers on the dual band strength index, we did not make a new high, right? Now we have an 8 and a 2, which is even stronger than the previous months. And again, we're starting to see the momentum wave starting to slow down here. And on the weekly time frame, it's actually looking quite bullish, right? With a -5 and a 16, and that's because last week we had a pretty substantial rally. We had like a 5-day rally towards the upside, and that's probably why this new weekly candle is looking very promising. Like the momentum is going to continue. But when we look at the shorter time frames, like the daily time frames on the Qs, we can see that there has been a significant reduction in green money flow here. We've been nonstop rallying essentially since the lows, and really when the March bank failure kicked in, that's when we saw the rally really didn't stop until we reached essentially 15,800. And then now after that, we got a pretty significant pullback. Since then, we got like a bit of a 9 to 10% drop. But now we are significantly off the lows. We're up 60% off the lows. But if you look at the momentum waves, they are starting to curl in here. We'll have to see if these dual band strength index on the daily time frame with an 11 and a 0 print a red dot. Again, if we get a drop this week, then again this could print a red dot here. And again, if the green money flow gets too close to the zero line, it could start to cut into the red, which is pretty dangerous, as we've seen in the past. Once it gets into that red money flow, sometimes we've got that big bear market here, but it doesn't always have to lead to dramatic sell-offs. As we can see here, we cut into the red, and then we got some sideways price action until we recovered, and then we had that big this big rally since January. Okay, so right now I would just be easing on the side of caution. I wouldn't be getting into extreme heavy longs, although some people still see us bullish and going into new all-time highs by the end of the year. Although that is a possibility, I wouldn't bet the farm on it. I would most likely look for a potential lower high, right? So right here, if we do start to pull down, then eventually you are going to find some support right around 4,200 to 4,100. So if we start to come down here, there is still the possibility that this doesn't have to be the C wave, and that this is a potential wave 4 pullback that is still in play, and then you are going to continue to all-time highs after that, right? So if anything, I would be waiting, sitting on cash for a better buying opportunity, because I don't think this would be your wave 4 low in place. I think if it's going to continue down, then you're probably going to keep going down a little bit further, and then you're going to get a bounce after that to new all-time highs. If anything, that's the bullish case. The bearish case is that this was your wave 5 top here, and now you are going to continue downwards, and then you're going to make your way down. Something like this, like I've illustrated here. Sorry, not your wave 5, your B wave top, and then you're going to start to make your way down into a wave 1. Looks sort of like what an ABC correction that we were getting right now, and then you're going to rally back up. I don't know when this rally would stop in wave 2, and then after that you'd probably get a pretty significant sell-off in wave 3. Right, so that's my primary account right here. But I'll follow up with you guys and update you guys on what I'm seeing on Market Cipher, because again, this is an amazing tool to use with Elliott Wave. And again, one of my members mentioned this to me, that I should be using Elliott Wave with Market Cipher, and it's been just working out tremendously so far. So again, we'll have to see if this does play out, and if this is a wave 5, then we are going to go to new all-time highs, but we would have to confirm that by taking out these highs here. And again, we have a lot of gaps to fill. Sorry, let me just get on the triple Qs here, so you can see that we actually have a gap up here that has to fill. Actually, we filled the gap on the triple Qs. I think it's the SPY that has its gap to fill. Yeah, so the SPY still has its gap up here right around 456. And again, we have to fill this and take this red bar high out, and then we can make a lower high, and then then you'll come down. But if you take this out, then you can go to new all-time highs. All right, so for the Qs, you already filled the gap here. You're back to resistance. My best guess is that you're going to keep going down here, and you're going to start to fill these gaps towards the downside at 340, 330, and then 310, and then 305. But I think you're going to start to run into some pretty strong support once you get to these levels. And again, these levels seem pretty unattainable right now, but we'll just wait and we'll see how the charts play out. But I'm seeing a lot of people being really bullish right now, and they're still going to be bullish regardless of whatever bearish cases. And again, that's what makes a market. There's some bullish people, and then there's going to be some bearish people. But for me right now, I'm looking that this is probably a little bit bearish here, and you are starting to run to pretty close to the all-time highs. And now that we're getting pretty close to the all-time highs, everyone is thinking that we are going to go to the all-time highs, right? It seems like everyone is jumping on the conclusion that we're so close to the all-time highs, we are most likely going to go to the all-time highs, which may be the case, but we'll have to see, and then the markets are going to prove us to see who's right and who's wrong, okay? Anyways, hopefully you guys enjoyed this video. I'll talk to you guys later. Peace.